So, Lo, moving on to your own portfolio now, the First Avenue local equity portfolio. It has recovered extremely well over the last period, especially after the relative underperformance of quality in the South African equity market between 2017 to around about 2021. Now, there must have been very uncomfortable periods during this time. How did you manage to maintain your quality bias?
Well, Alex, indeed, it was a very, very difficult time. And during that process, we tinkered with a lot of ideas. Some of the ideas, as we just spoke now, related to does quality still work in South Africa? It's a commonly held belief which, thankfully, we do not subscribe to. We considered it, but we don't subscribe to it. We've continued to focus on our core capability, which is addressing systemic risk. Fundamental analysis is extremely critical when you're a quality investor because you really generate alpha from two sources. Number one, share prices gravitating to your valuation, and then number two, a company renewing corporate value consistently over time to extract compounding. So that was extremely critical that 85% or 90% of the portfolio does that. But what we have realized is the counter move to investing in quality is the rate at which systematic risk overwhelms systemic risk. So when we had quantitative easing, that risk was so high that regardless of what we did addressing fundamental systemic risk in the portfolio, it was so overwhelming. So in order not to get too much left behind and wiped out by systematic risk, we figured out how to invest in the one asset that addresses systematic risk, gold equities. As you know, gold equities are highly leveraged to the gold price. Whilst we are underweight gold equities, we still stock pick within that sector of primarily three companies. Our preferred holding is AngloGold. We are neutral Gold Fields, and we do not own any Harmony. That to us is a pecking order of quality in the gold sector. In the past, we held zero of gold equities. Today, as you can see, we are marginally underweight. We just don't hold Harmony. So we've addressed both systemic risk to the tune of 90 to 95% of the portfolio, such that if the market falls, our portfolio remains defensive, but we also capture upside stemming from addressing systematic risk through gold holdings, as is the time now when gold is running. Our portfolio is doing really well because we've plugged that hole.